Hey, good morning. Let's go over today's trade plan. So the primary catalyst this morning was the non-farm payroll report, which at this point is out of the way. It came in better than expected, but the reaction in the market so far has been very two-sided. So heading into the open, we're going to be using 95.75 to 97.75 as the micro bull bear zone to establish very short-term directional bias. Bigger picture, a break below 91 to 93.5 is needed to confirm the sell side in control. Above initial support zone, technically buyers can still maintain control. On the upside, a breakout above 0275 to 0475 would confirm the buyers in control and bring 0708, 10 quarter to 11 quarter, and potentially the open gap at 14 and even this upper resistance zone, 14.5 to 16.5 into play. But really, the reaction at pre-market resistance and how the market deals with 91 to 93.5, that is really what's going to determine which way we're going at this point. We know that bigger picture, we are still in an uptrend, and as long as we hold above 91 to 93.5, that uptrend can still be maintained. And if we hold above 95.75 to 97.75, then again, buyers can maintain control, but we do need to see a breakout above 0275 to 0475 in order to confirm initiative buyers active in this market. And on the breakout above 0475, we'll have to be careful on the short side. So even though we have some resistance at 0708 and 10 quarter, 11 quarter, it doesn't mean that those are going to be areas to short. Those can be used then as profit targets if the market is showing upside momentum and continuation. On the downside, breaking below 95.75 would signal weakness in the market. 91 to 93.5 again is the key support zone today, and if we break below 91, then we can actually get liquidation down to 85 quarter to 86.75 and 80 half to 82 half. Now this is the bigger picture balance area low, and first test of the zone, buyers can definitely be active, but keep in mind that below 91, the sellers are going to be more dominant. So as we head down, in the event that we get a downside break, we need to be careful even at 80 half to 82 half, because even though this zone is a very strong support zone and a very key support zone on the day time frame, if we're going down on a lot of momentum, then we may get a tradable reaction off the zone and then even test below it before we get at least before there's potential for a bigger reversal back up towards 91 to 93.5 and potentially 95.75 to 97.75. So over here, the sellers do have to be careful at 80 half to 82 half, because this can quite easily turn into a false breakdown on a much larger time frame if we start heading down there. So it's a key support zone, 80 half to 82 half, but it doesn't mean that we can't crack below there and then turn around. We could quite easily test below, go down to 77, 75, put in a false breakdown, and then turn back up. So at 80 half to 82 half, the expectation is for responsive buyers to be active. But at the same time, even if we break below the zone, unless we're doing it on extremely strong momentum and we slice right through 77, 75 as well, the caution point here is that it can turn into a failed breakdown and turn back around. So just keep an eye out in the event that we do go down. Keep an eye out for a failed breakdown scenario off of the bigger picture balance area low. But in the short run, 91 to 93 half is going to be key. 95.75 to 97.75 can help us establish just which side is being more dominant on the smaller time frames. So far we are seeing more selling in the market. So how the market reacts to 91 to 93 half is really going to set the tone for the morning. So those are the main thoughts heading into the open. Let's see how the market reacts to initial support. That will let us know which side's in control. And then if we break initial support, then our focus will be more on the short side until we get all the way down to the balance area low. So those are our main thoughts heading into the open. Let's see, just if the buyers can maintain control at initial support. If not, then we'll be more active on the short side, cautious on the long side until the market reaches or even tests below the balance area low.